and also on that TDS and GST. TDS and GST payments also.
Okay.
We have to conduct another series.
We'll plan, ma'am. We'll do that. Yeah. Good that, I mean, I'm so happy that students are very much interested to learn a lot of new things.
Yes, sir. Really, their participation and their practical involvement really good. Very happy to see that.
Yeah, very true, ma'am. Very true.
I think you are answering about 50 to 60 questions.
Easily. Yesterday was much more actually.
Yeah, really.
So, I mean, good that so many students are participating and asking questions. And see, whole objective is that whatever we are doing from the branch side and what I'm doing, the objective is simple, that they should be self-sufficient in terms of doing by themselves.
Yes, sir. Yes, sir.
With that idea only we are doing all this.
Yes.
Yeah. So I think all of them have come to the WhatsApp group also, ma'am.
Yeah. We have created WhatsApp groups, sir.
Yeah. Good. Because everybody was asking me also personally, sir, let's join the group,
Yes, sir.
Good, ma'am. So how is our sir?
Thanks, sir. Sir, shall we start?
Yeah, we'll start, ma'am. Sure. Ready.
Today's resource person, CAT Shivateja, and my dear students, a very good evening to one and all. I welcome you all for the fourth day of virtual series of program on GSTR filings and land practice conducted by Vijayawada branch of SICASA. Hope all the previous sessions have value added to your knowledge on GSTR filings. And today, sir is going to deal with GSTR 9 and 9C and also GSTR full, which has to be covered on the day 2, could not be covered due to the lack of time. Okay, sir. Without waste of time, I'll ask the sir to proceed. Over to you, sir.
Thank you so much, ma'am. Thank you. Yeah. So, guys, I hope everybody is ready for the fourth day's discussion and the last day discussion with respect to GST returns. That today it's time to talk about some interesting areas, that is with respect to GSTR 4, GSTR 9 and GSTR 9C also. And of course, I know that first of all, you will start telling that, sir, 9C is not there now, chartered accountant will not sign, cost accountant will not sign. I agree to the fact that our signature is not there anymore. But even though our signature is not there, our role is still there. Because if you remember on day 1 only, I told you, even though 9C is not there, still they have introduced a concept of self-certified reconciliation statement. So reconciliation statement is still mandatory. Now, that is the reason why we'll also spend some time on discussion about 9C also, where we'll discuss how do the reconciliation looks and what is that we actually do when we talk about reconciliation. So these are interesting aspects also we'll cover with respect to the reconciliation aspect with respect to GSTR 9C also. Don't worry about it. Okay, so let's start the discussion. Start with GSTR 4, then proceed to GSTR 9 and also then GSTR 9C. And the reason why we are covering GSTR 4 today is very simple reason, because GSTR 4 is also one return which is to be filed on an annual basis. Yeah. So we'll spend some good time. Don't worry. And, I request students to please kindly put your audio on mute so that I can happily spend my time on discussion. Yeah. So a couple of friends were asking, sir, will the time be sufficient for our discussion? Don't worry. If time is not sufficient, I'll spend a little more time in discussion. No compromise for this. I'm sure when the content is something interesting and when the topic is very interesting, I'm sure you guys will not worry about the time. So we'll spend some good time. Okay, my dear friend? So that's the first question already raised for today. Will the time be sufficient? Don't worry. If it's not sufficient, we'll extend. Don't worry. Okay, my dear friend? Yeah. Yeah. So first, before I proceed, let me share the presentation for you guys so that you guys can keep it for your reference. Let me share the document first. 1 second. Yeah. So document has been sent, my dear friends, and of course, the size of PPT will definitely be slightly higher than compared to the first 3 days sessions. This session will be slightly, the points of slides and the number of slides what you'll find will be definitely higher, because there are a lot of practical things what we have to talk with respect to 9C, and the number of tables involved in GSTR 9 are much higher compared to GSTR 1 and GSTR 3B. That's why it will take some time. That's why the size of presentation is also higher compared to the first 3 sessions. Clear? So first, let's spend some very good time on this discussion. And at the end of the session, whatever queries you have got, that also we'll discuss. In middle of the session also, whatever queries you get, I'll make sure I'll answer all your queries. And if any query or any question is missed out, end of the session, I'll cover all your queries. Don't worry at all. Done. So let's start the discussion without any more delay. So first of all, my dear friends, so first, let me ask you one straight question. What is an annual return? Come on, guys, what do you think is an annual return? Very clearly, annual return is nothing but it's a consolidation of information on the data what we have filed in the monthly returns. So basically, guys, if you look at an interesting discussion here, in case of regular taxpayer, we will file GSTR 1 and GSTR 3B. As we all know, 1 and 3B. Of course, when we go for QRLP scheme, we will file 3B on quarterly basis, and GSTR 1 instead of 1, we go ahead with the concept of IFF, which is invoice furnishing facility, where we furnish the details of our B2B invoices in first month and second month. Now, consolidation of all this data or reconciliation of all this data, or in terms of verification of all this data and reporting the actual final figures for the entire year as a whole, will be done in an annual return. In fact, more or less, lot of figures in annual return will actually auto-populate in from GSTR 1 and GSTR 3B. But practically, there is a high possibility that even though figures are auto-populating from 1 and 3B, for some reason, we might edit that numbers, change that figures. But why? We'll talk in detail. Don't worry. I'll give different scenarios and examples, why that situation will come. Then we'll talk in detail. Don't worry. Next. When I talk about composition registered person, this guy, what he will do is on quarterly basis, he will file CMP 08, which is just a statement for the purpose of payment of tax. It is just a statement for the purpose of payment of tax. That's it. But apart from that, he will file one return on annual basis in form GSTR 4. And let me tell you, for this normal annual return, the due date is 31st December of next financial year. So in simple terms, for financial year 2021, the due date is 31st December 2021. But when I talk about GSTR 4, the due date is 30th April, following the end of financial year. And of course, practically a lot of times these due dates gets extended for various reasons. But I'm just telling you the actual due date as per the law. But due to some technical glitches or any reason whatsoever, there is a high possibility that practically GST Council may extend the due date considering the situation and also the circumstances. Clear? So without delay, let's start our discussion. Before that, there is one question what I'm seeing there. Sir, alcohol is not covered under GST, sir. Could you please explain about service by way of granting alcohol liquor license? Is it supply of service or supply of goods? My dear friend, let me tell you one point, that alcohol liquor is not covered under GST. As we all know, that GST definition only says GST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. We know this point. But as you remember, I already told you that the power to levy tax on alcohol liquor for human consumption is actually there with state government. Now, state government gives alcohol liquor license to various persons. Now, whenever this alcohol liquor license is given, for that, there is a clear-cut notification and circular which has clearly clarified that service by way of granting alcohol liquor license is not taxable. And it is neither regarded as supply of goods nor regarded as supply of service. When it is not a supply of goods and not a supply of service, there is no question of GST. I hope your question is answered. Yes, my dear friend, if your question is answered, then I can proceed further happily. Yeah. Good, perfect. So let me proceed to our discussion on the presentation and start the story and discuss all the tables there. And any doubt you get in the discussion, feel free to ask. Don't hesitate. Come on. So first, you can see there today's discussion GSTR 4, GSTR 9, and GSTR 9C. Lot of intricate aspects we'll talk, and we'll discuss every column in our table as to what are the points involved in this. And any doubts you get anywhere, feel free to ask. Don't hesitate. Next. What are the annual returns to be filed by different registered taxpayer? Come on, Serum. GSTR 4, 9, 9C. In fact, according to me, annual return is only GSTR 9. In law, the language used is annual return only for GSTR 9. But GSTR 4 is a return which is filed on annual basis. But the title of GSTR 4 is not an annual return. GSTR 4 is only a return which is filed on annual basis. But the title of GSTR 4 is not annual return. The annual return covers only GSTR 9. That's an interesting point. Next. Who are required to file this annual return? Let's see that. Come on. GSTR 4, every composition taxable person, even registered under composition scheme for at least 1 day during the relevant financial year. And to make you recall, guys, composition scheme, we discussed that there is a concept of 1.5 crore and there is a concept of 50 lakhs. And the concept of 1.5 crore is applicable only to 3 categories of persons. Number 1, manufacturers. Number 2, traders. Number 3, restaurant and catering services. Restaurant, guys, it is only 50 lakhs. And in the 50 lakh scheme, it is tax rate is 3% plus 3%. And there's one point what we wrote there, even registered under composition for at least 1 day during relevant financial year. How can that be possible? Situation is very simple that, for example, if Shivateja, who is a chartered accountant, if my turnover during preceding financial year did not exceed 50 lakhs, then current year I will opt for composition scheme. But by any chance, during the current year, if my turnover, if my turnover exceeds 50 lakhs, the day when I cross 50 lakhs, I should move out of composition scheme and get into normal scheme. There is one separate form in the GST portal for the purpose of withdrawing from composition scheme. So once you cross the turnover limits of that 50 lakhs or 1.5 crores, then you have to move out of composition scheme. You cannot stay in the composition scheme at all. Once you cross that threshold limits, that's why they have specified that there is a possibility that you are not in composition for a whole year. You could be in composition only for part of the year or even for only single day. But whatever circumstance it is, even if you are under composition for a single day, still you are required to file GSTR 4. Next point. GSTR 9 and 9C. All taxpayers registered under GST, including e-commerce sellers and operators. But one point you have to understand, this concept of GSTR 9 annual return is not applicable to CTP. Who is CTP? Casual taxable person. If you remember, we discussed that the concept of CTP, where registration is valid only for a period of 90 days or the period specified in the application, whichever is earlier. And the set period can be further extended for another maximum 90 days. When registration is only for 90 days for such a short period, then law told it's okay, you need not file annual return. And then input service distributor, these guys do not provide or render any or do any outward supplies. What they do is only distribution of credit. Then NRTP, same like CTP, but CTP is a local guy, NRTP is a foreign guy. Then tax deductor, tax collector, who will file GSTR 7 and GSTR 8. So for these guys, CTP, ISD, NRTP, tax director, tax collector, for this category of persons, GSTR 9 will not apply. Now, when there is no GSTR 9, there is no question of GSTR 9C also. Next. An interesting notification. Person supplying OIDER services. When I say OIDER, my dear friends, the full form of OIDER is online information. I repeat, OIDER stands for online information database access and retrieval services. I repeat, my dear friends, OIDER stands for online information database access and retrieval service. That means online there is some information or there is some database which we can access and which we can retrieve. For example, Amazon Prime or YouTube or Netflix, there is some data which is there online, which we can access and which we can retrieve, and it is purely automated data. No doubt about it. Getting clarity, guys? Then next point, what did I give there? Foreign airlines are not required to file Form GSTR 9C. Foreign airline companies also, they are also not required to file GSTR 9C. Sure. Before I proceed, I've got 1-2 questions. Sir, if we have exports with payment of tax, whether we have to show in 3.1A or 3.1B. So my dear friend, let me tell you, whether it is with payment of tax or without payment of tax, it is still covered in zero rated supplies only. So you should always ensure that you cover that in zero rated supplies. And if it's with payment of tax, show the tax figure. If it is without payment of tax, don't show the tax figure. That's it. Next. Sir, composition scheme dealer has to file GSTR 4 and the limit exceeds, has to file GSTR 9. Yes, composition person has to file GSTR 4, but if he moves out of composition, then automatically what will happen? He'll become a normal guy. So he has to file normal annual return also. Both will become applicable. Next. Sir, Amazon is e-commerce operator and also collects tax. Will GSTR 9 be applicable? In fact, my dear friend, let me tell you, in case of e-commerce operator, they introduced a concept known as GSTR 9B, which is an annual statement, which is very similar to annual return GSTR 9. That's a point what you have to understand. I hope your query is solved. Yes. Come on, next point. See this interesting table, my dear friends. This table gives a lot of insight into the applicability of the GSTR 9 and GSTR 9C. Please see that. Classification of taxpayers for the purpose of filing. And top line, you see pan-India turnover. This word is important because I already told you before also that whenever we calculate aggregate turnover, we consider turnover on all India basis under the same pan, because aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies, and exports. Come on, what is called an aggregate turnover? Aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies, and exports on all India basis under same pan. So that is the reason why we always take into account pan-India turnover. For the purpose of registration or for the purpose of the tax, GST audit, we always look at pan-India turnover. Clear? And see below now. If turnover does not exceed 2 crores, turnover does not exceed what, sir? 2 crores, then GSTR 9 is optional and 9C is of course not applicable. When I say optional, what does that mean? Please see, taxpayer are given an option to furnish annual return. That means it's your option, it's your choice whether you want to file annual return or not. And by any chance, if you do not file it, the auto-populated GSTR 9 will be deemed as furnished on the due date. That means law is telling if you don't file GSTR 9, we will treat as if you have filed with the data which is auto-populated. And how it will auto-populate? The turnover figures will come from GSTR 1, tax figures will come from GSTR 3B. Logic is simple because the tax is discharged when we file GSTR 3B. We do not pay tax when we file GSTR 1. The question of paying tax will come into picture only at the time of GSTR 3B. See the next point. Turnover more than 2 crores but up to 5 crores. Then 9 is mandatory, but 9C is optional. But more than 5 crores, then definitely you have to file 9. You should also file 9C. That's an interesting point. Come on, next. Before I proceed, 1-2 queries. Sir, Amazon seller and Amazon company both are different. So Amazon is e-commerce operator and seller is normal seller. Yes, definitely. Seller is somebody who is actually, one point you have to understand, in Amazon platform, 2 things they are doing. One, Amazon is an e-commerce operator who are selling goods on behalf of some other supplier. And Amazon also sells its own products through Amazon platform. So they are also acting as a normal seller also. I hope your question is answered. Next. For 1920 GSTR 4, is this amnesty scheme applicable, sir? Yes, amnesty scheme is applicable. You can still follow that. And what are the late fees? Already we covered in the first session itself. Overview of GST returns. Done. Next. Now let's start discussion about GSTR 4, my dear friends. Let's spend some time and complete this so that we can spend a lot of time on GSTR 9 and 9C, because that will take more time. 4 is pretty simple. 4 will not take much time for us, but 9 and 9C will take a lot of time. So we'll spend a lot of time there. But see now, GSTR 4 is the GST return that the composition taxpayer must file annually from 1920 onwards. Prior to 1920, we used to file GSTR 4 on quarterly basis. But with effect from 1920, they brought this GSTR 4 as an annual return for composition suppliers. And the returns once filed cannot be revised. That's a fundamental principle in GST. Once you file it, you cannot revise it. And moreover, it is annual return. You cannot rectify that also. In monthly return, if you made a mistake in 1 month, you might rectify that mistake in next month under amendment column. But in annual return, if you do a mistake, then gone. Then automatically GST department will start issuing notices and they will start attacking. In fact, I will also show you how they will give notice. And after notice comes, how do we respond to that notice? That also I'll show you. Don't worry. Yeah. Return once filed cannot be revised, and also attract a late fees of 200 per day if filed beyond the due date. 200 is because 100 plus 100, CGST and SGST. Next point. Prerequisites for filing GSTR 4 annual on GST portal. Before preparing and filing GSTR 4, composition taxpayer must have satisfied the following conditions. Number 1, registered and opted for composition scheme at least 1 day during the relevant financial year. So he must have definitely been under a composition scheme. Next, filed all the relevant form CMP 08 statement for all the quarters. So every quarter he should have filed CMP 08. Next, make a note of aggregate turnover registered for the preceding fiscal year, that is financial year. Next point. Some query. Sir, so GSTR 9A is not applicable for composition. Earlier for 9A, there was a form 9A for composition scheme, but now they made this GSTR 4 annual basis. If we file this, more or less our job is done, because annual figures are reported already in GSTR 4. Are we clear? Yes. Next point. See that. Details what we will enter here. 1920, once we click that button, prepare online, or one more option, upload or download JSN file. Select the tables to add or view details, and GSTI and taxpayer name are auto-populated, definitely. Next, in this section, the taxpayers furnish details of previous year aggregate turnover and turnover for the period of April to June for the first GSTR 4 filing. Because GSTR 4 first 17-18, obviously it is April to June. Next, a nil GSTR 4, by any chance if there are no transactions and no records which are involved of outward supplies or inward supplies, then you have to file nil return still. See that. No record of outward supply. Taxpayer did not receive any goods or services. He has no other liability for reporting. Form CMP 08 for all the quarters are filed as nil. You have filed all the nil returns. Then no late fees is to be paid for GSTR 4. In case where by one point is very clear that for GSTR 4 annual return, I told you that late fees is there, but if it is nil return, practically I've seen a couple of cases where the late fees is not auto generating. So that's an interesting point what you have to observe there. Next point. Yeah. See that what are the tables there? 4A, 4B, 4C, 4D. I'm sure you're able to see that. 4A is what? Inward supplies from registered supplier other than reverse charge. Next, 4B, inward supplies from a registered supplier reverse charge. Now, if a person is under a composition scheme, it doesn't mean that RCM provisions will not apply to him. Even though a person is under a composition scheme, still the provisions of RCM will still apply, my dear friends. For example, if I am registered under a composition scheme and if I have taken services from a GTA, then I should definitely pay under RCM if GTA opted for 5%. Because GTA opts for 12%, then there is no question of RCM coming into picture. Next, 4C, inward supplies. Hold on. 4C, inward supplies from, 4C, inward supplies from unregistered suppliers, if you have taken anything. Then 4D, import of service. 4D is what, my dear friends? Import of service. Then table 5, it's a summary of CMP08, which is the taxes what we have paid on quarterly basis. Then table 6, take tax rate wise outward supplies and inward supplies attracting reverse charge. Then TDS, TCS credit received. That is also possible. And one point you have to note is that this TDS, TCS credit will not go and sit in electronic credit ledger. It will actually come and sit in electronic cash ledger. If it would have come and sat in electronic credit ledger, it would have not been useful in composition scheme. Because in case of composition registered percent, whatever tax they'll pay, that 1%, whatever it is, 0.5 plus 0.5, or the story of 2.5 plus 2.5, or 3% plus 3%, that they should pay from their own pocket. That is, composition tax should be paid only using electronic cash ledger. We cannot pay using credit ledger. So it is interesting to note that this TDS, TCS credit, whatever we will go and accept and file it, will not come and sit in electronic credit ledger, but instead it will come and sit in electronic cash ledger. So that's a great point to be noted here. That's why there is some importance for TDS, TCS credit received. Next point. See what are next things. So first, we will add item-wise details. Inward supply from registered supplier. So first, supplier GSTIN, taxable value, tax rate, amount of tax. Then inward supply from registered supplier, other than those suppliers attracting reverse charge. So you can see that table 4A title what I gave there. Inward supplies from registered suppliers other than reverse charge. GSTI wise details of purchases from GST registered suppliers. Then table 4B, inward supplies from registered suppliers, which is covered under reverse charge. And once the invoices are processed, that's how it looks. And the point to be noted here is that this button, that green color box, what we are looking at, this button allows taxpayers to enter the taxable value and choose the GST rate mandatorily. That's important point. Next. Table 4C, inward supplies from unregistered suppliers. PAN is not mandatory, so you can enter the trade name or legal name of such suppliers. Next point. Table 4D, you can look at what is that? Import of service consists of details of import services imported on which IGST has been paid. Because in case of import of services, we would have already paid tax under reverse charge mechanism. That is the reason why there is one separate column for import of services. And that's how we'll process that details. Next point. Table 5, summary of CMP08. This is, of course, very, very important table. The most important table actually. Summary of self-assessed liability as per form GST CMP08. Yeah. Net of advances, credit note and debit note, and any other adjustment due to amendments. Yeah, before I proceed, there is one query from our friend. Sir, let's say if the person is registered under composition time, but after exceeding threshold limit, taxpayer has to switch to regular in middle of the financial year. He should also file GSTR 4 and GSTR 9. Definitely, yes, my dear friend. He should file 4 as well as GSTR 9. Both have to be filed. Next. See the next point. Tax rate outward and inward supplies attracting reverse charge. So we should definitely show the details of tax rate wise. What is our outward and inward supplies? Clear? Next. Anyways, in outward, we do not have much rates because it's only 1%, 5%, 6% and all. But in inward only, we have got so many rates of 5%, 12%, 18%, 28%, all different rates we have got only in inward. Next point. TDS, TCS credit, that also will report there. And you can see one interesting box circle what we have given there. Negative values are also allowed in 4A, 4B, 4C, 4D and table 6 also. Next point. Table 8, interesting point. Tax, interest, late fee, payable as well as what? Paid. So whatever is the tax, interest, late fee, payable and paid, that is also captured in this table number 8, my dear friends. See that. Taxpayer shall use create challan option if the cash in electronic cash ledger is insufficient for full or part payment. So in case where you do not have sufficient balance in cash ledger to make payment of tax, then we'll deposit, create a challan, deposit the money in cash ledger, and then we will do the payment of tax. Then, my dear friends, if an electronic cash ledger has sufficient balance for full payment, then the cash will be adjusted from the ledger for tax payment automatically, and no amount is displayed in the additional cash required column. Additional cash required column figure will come automatically in case where the balance in cash ledger is not sufficient. For example, we have to pay 120 rupees, but in the cash ledger we have got only 100 rupees. Then automatically additional cash required will show a pop-up of 20 rupees. Now this 20 now we will deposit in cash ledger and use it for the purpose of set off. And if you remember in previous session, I told you that this create challan and all is done in PMT 06. And there are major heads, minor heads there. Major heads such as CGST, IGST, cess, and minor heads, tax, interest, penalty, fees, others. Clear, guys? Then what are the payment modes? E-payment option you have got, over the counter you have got, NEFT RTGS you have got. And one point is very clear that over the counter means we will take a print of the challan, go to the bank and physically make the payment. And this facility of over the counter is allowed only when the amount is up to 10,000 rupees. But the amount is more than 10,000, then you can't use the facility of OTC, that is over the counter. Next point. GSTR 9. That's the story now, which will start discussion, which is very, very important. And in fact, my dear friends, the point is very clear that GSTR 4 is not a big thing. It's pretty simple. And what we always do is a simple point, my dear friends. For inward figures, we will take the data from GSTR 2A. I will not even look at 2B. In case of composition percents, we don't touch 2B at all because monthly, we are not taking credit to look at your GSTR 2B. But 2A, we will see to see the details of all our inward supplies, what we have done. And by any chance, if something is missing in 2A, then we will see our books and check what is the inward supplies. And outward supply, that data we will take from our books only. As simple as that. And outward supply figures, already we would have paid tax on quarterly basis while using CMP 08. From there, we will take the taxes figure and show in our table in GSTR 4. Pretty simple, guys. GSTR 4 is not a big deal. Small point, but still, I wanted to spend little time with you guys so that you get some clarity of thought there. Yeah. One question from our friend. Sir, I just want to know that composition scheme is available to all type of supplier. I already told you, my dear friend, the concept of composition scheme is applicable only to such category of person whose turnover during preceding financial year does not exceed 1.5 crores. And that too, it is only for 3 categories of persons: manufacturers, traders, restaurant and catering service provider. And for other than these 3 categories also, they can still go for composition scheme, provided their aggregate turnover during preceding financial year does not exceed 50 lakhs. Shivateja being chartered accountant, I can also go for composition scheme, provided my turnover during preceding financial year does not exceed 50 lakhs, where I'll pay tax at the rate of 3% plus 3%. Yes, my dear Vikas, I'm sure you got your clarity. Yeah. Next, another question from our friend. Sir, restaurants can't claim ITC no matter under regular or composition. 100% you are right, my dear friend Srikanth, that restaurants cannot claim input tax credit because practically the rate of GST for restaurants is 5%. And the beautiful point to be noted there is, even in composition also, the rate of tax is 5%. So whether it is composition or it is normal, still the rate of tax is 5% only. That's a big point what you have to observe there, that in case of restaurant, whether you go for composition or you do not go for composition, still the rate of tax is 5% only. Now, if you ask me, sir, should they go for composition or they should not go for composition? Then my point is simple. 1, if turnover during preceding financial year did not exceed 1.5 crores, you can go for composition. If it is more than 1.5 crores, then you cannot go for composition. That's one point. Second important point, if that restaurant goes for composition, then they cannot collect tax from customers. If the restaurant goes for composition, then they cannot collect tax from customers, because I told you that composition registered person, they cannot collect tax from customers and they should pay tax from their own pocket. They have no right, no authority to collect tax from customers because they don't given, and that is the reason why this composition persons will not issue a tax invoice. Instead, they issue a document known as bill of supply. That is the reason why a lot of times when we go to small Udupi centers, small hotels, at the billing counter backside, they'll put up on board, we are under composition, we do not collect tax. And some big hotels, definitely they collect tax because they are not under composition. So they're collecting tax, that means they are not in composition. If they are not collecting tax, that means they are under composition. But as I told you already, by seeing the GST number, you cannot identify whether they are under a composition scheme or not. That is not at all possible, my dear friend. I already told you, because there is no specific pattern in GST number by which seeing that you cannot tell whether it is composition scheme or not. You yourself have to enter that such a taxpayer and then check whether that person is in composition scheme or not. That's the only option. But by seeing the number, you can't identify whether they are in composition scheme or not. Done. I'm sure your question is answered. Yeah. Next. Sir, for small taxpayer whose turnover is less than 1.5 crores, better to opt QRMP rather than composition, as taxpayer can claim credit. Am I right? My dear friend, let me tell you, whether to go for composition scheme or not is a pure business judgment, for a reason being very clear that, if, for example, let's say if your profit margin is let's say higher, a profit margin is lower. Based on your profit margin, generally they decide whether to go for composition scheme or not. For example, let's say 100 rupees is purchase price, 120 is sale price. What is the difference? 20 rupees. Now, if he is not in composition on 20, he would have paid 18%, assuming 18%. 18% is how much? 18% is 3.6. Correct? But imagine if he would have gone for composition, then directly he would have paid tax of 1% only on 120. 1% on 120 is 1.2. Is 1.2 better? 3.6 better. So basically, whether to go for composition scheme or not is a pure business judgment, which is to be taken based on the profit margins involved there. And a lot of people go to composition scheme because they need not follow the law monthly basis. Every 3 months they can relax, and only once in 3 months they'll get up and comply with the law. That's the reason why I get to see a lot of small wholesalers or retailers who have got shopkeepers, grocery shop, small supermarkets. These guys generally go for composition because they feel that's more simple for them. Yeah? Clear? Done. Next. Another question. Sir, can you please repeat tax rate for manufacturing and traders and restaurant? In case of manufacturers, the rate of tax is 0.5% plus 0.5%. For traders also it is 0.5% plus 0.5%. But for restaurant it is 2.5% plus 2.5%. That's the answer. I hope you got Akin. Next. Another question. Since both cases tax rate is 5%, better we can go for regular only, right? For restaurant. Yeah, choice is yours. The point I already told you very clearly, that in case where you're ready to comply with the law on monthly basis, then better go for regular only. But in case where you're of the opinion that I don't want to go for monthly basis, I'll relax and comply only quarterly once, then you'll go for composition. But small Udupi hotels, I've seen so many small Udupi hotels and small tiffin outlets. These guys go for composition only because they don't want to follow monthly basis. They feel it's better I'll go for quarterly only, because more or less they do business in cash. And they don't want actually to give invoice to every customer and collect the tax. They just bluntly quote one lump sum price. For example, idli, dosa, some price they quote and start taking the money. So these small tiffin centers and Udupi hotels, they don't prefer to go for regular. They prefer to go for composition. Done. I hope all the queries are solved. If it is yes, then I can proceed for discussion about some great concept of GSTR 9. That will take some sweet time. Yes. Yeah, one more question from our friend. Sir, then for restaurant, advice not to opt for composition. I already told you it depends upon the client's business interest and the profit margin involved for the client. based on which he has to decide whether to go for composition scheme or not. And restaurant, since anyways you can't get credit, even though composition or not in composition, you better decide based on your type of customers what are involved. If it is a normal Udupi Tiffin Center, these guys will not go for normal. They guys prefer composition because they don't want to follow the law on monthly basis. That's a pure business decision making. Clear, my dear friend Rashekar? Yeah. Another interesting, wow, brilliant question actually. Sir, can we take two GST numbers, one for composition, other for regular? Yes, my dear friend, because provided you are married. On your name you take regular, wife name you take composition. Or your name you take composition, wife name you take regular. Or your name you take composition, father's name you take regular. Because the point is very clear, because as per law, you cannot be under both the boats, telling that I will take two GST numbers, one regular, one composition. Not possible. If you have, when you have got only one income tax, simple. Under that PAN, either come for regular or come for composition. And there cannot be a case where Shivateja, who has got one PAN, let's say I've got business in two states. I can't even tell in one state I'll go for regular, one state I'll go for composition. That also I cannot do because law clearly told all the GST numbers under one PAN should either go for regular or should go for composition. They cannot tell I will take two GST numbers, one regular, one composition. That facility is not there. Clear, my dear friend? Done. Next. Sir, why restaurants can't claim ITC? Yeah, restaurants cannot claim ITC because as per law only they told GST rate is 5%. In a rate notification, they have given that it is 5% without credit. In rate notification only they have given that rate. Like how builder apartments, constructive and residential apartments, there also GST rate is 5% only without credit. That is a rate notified by the government. And government keeps changing the rates time and time out based on the industry needs. For example, today there was GST Council 44th meeting where they have reduced the GST rate for a lot of medicines, especially a lot of medicines related to COVID. They reduce the rates. They do that based on need basis. Then another question from our friend. For 1920 GSTR4, penalty is showing 10,000. I told you that the maximum penalty is 10,000 only. That's what it will show. 200 per day, maximum 20,000. And I've seen a couple of cases where it is nil GSTR4. I observed that one case penalty was not coming, but it's not penalty. Let me tell you, it is late fees. But as such, it is 200 per day, maximum 10,000. Clear? But amnesty scheme, what they brought, that will be applicable. That due dates they have given, right, 1st July to 31st August. During that period, you file only, amnesty scheme is applicable. You have to keep that point in mind, my dear friend, Mr. Khan. I hope your question is answered. Next. Yeah, one more question. Since we can't take ITC for supplies from restaurants, yeah, that is also true. If we take food and beverages, there we can't take credit. That's for sure. One more point. Sir, since we don't collect tax under composition and we pay tax out of our own pocket, does our expense in P&L account includes these taxes? Good question. Definitely answer is yes. Because any taxes what you have paid, indirect taxes, that you can consider. Because as per income tax provisions, whatever indirect taxes you have paid, that can be considered. But direct taxes what you have paid, income tax cannot be taken as deduction in income tax. But indirect taxes what you have paid, that can be considered. Clear? I hope all the questions are answered. If yes, I'll start the discussion. Please reply. Yes, wonderful. Thank you so very much. Let me proceed. Good. I love the participation. Now let me start discussion about some interesting story, GSTR 9. Now start the discussion, guys. Please concentrate, please focus. Something important discussion we are going to start doing now. So please kindly concentrate. Yeah, GSTR 9. First of all, guys, what is GSTR 9? GSTR 9 is basically an annual return where we are trying to reconcile all the data what we have shown in GSTR 1 and GSTR 3B. And that data we are trying to reconcile and show the final figures in our GSTR 9, which is purely an annual return. Now, please see here some interesting concept I'll explain you. Kindly please concentrate. Yeah. Listen carefully, guys. So first of all, we know that GSTR 1 is clearly a statement of outward supplies. Yes or no? 100% answer is yes, that GSTR 1 is clearly a statement of outward supplies. And GSTR 3B is a monthly return. Let me write the word return, not the word monthly, because in QRMP scheme, we'll file on quarterly basis. Again, you'll ask me that doubt. That's the reason why I'm writing that word. GSTR 3B is a return. Now, the story of payment of tax. The story of payment of tax happens in GSTR 3B, but not in GSTR 1. The payment of tax discussion will actually come in GSTR 3B, but not in GSTR 1. But if you observe, GSTR 1 only, we do that reporting of B2B, B2C, debit note, credit note, all the details invoice-wise we'll report only in GSTR 1. Of course, one point is very clear that in case of B2C large only we will show invoice-wise details. But for B2C others, we don't show invoice-wise details. I agree. But for B2B, definitely we show invoice-wise details. Correct or not? Yes. But in 3B, do we show any invoice-wise details? Do we have a column for credit note, debit note? Answer is no. Because in 3B, what happens is that whenever I'm reporting my turnover, what I'll do is my outward supplies, what I have done. To that, I will add my debit notes, what I have given, and I'll reduce my credit note, what I have given. And net to figure only is what I'll show in GSTR 3B. There is nowhere separate columns for debit note, credit note, separate column for reporting in GSTR 3B for B2B also, B2C also. That is the reason why one point which I want to tell you is that when I talk about GSTR 9, when I talk about what's that? GSTR 9, the figures of turnover are auto-populated from GSTR 1. I repeat, guys, in GSTR 1, the turnover figures are auto-populated from GSTR 1. But the taxes figure are auto-populated from GSTR 3B, because 3B is the place through which we have discharged all the taxes. So the taxes figure are auto-populated from GSTR 3B, but the turnover figures are populated from GSTR 1. And using the auto-populated figures, we will decide what figures are supposed to be shown. Now listen, let me give a small example. Let's say I'm talking about turnover. Yeah. In GSTR 1, we have shown 100. In GSTR 3B, we have shown 120. Turnover. I clearly wrote that word turnover, my dear friends. Please observe, in GSTR 1, I have shown 100. In 3B, I have shown 120. But what is happening is that as per my books, actual turnover is 120 only, which I already shown in GSTR 3B. That means what? In 3B, I have shown correctly and I discharge my taxes correctly. Did I do any excess payment of tax? Answer is no. Did I do any short payment of tax? Answer is no. Because my tax figures are always discharged through GSTR 3B, but not GSTR 1. Now, when I come to my GSTR 9, the turnover figure will auto-populate as 100. Now, this auto-populated figure 100, I will change it to 120. Because in GSTR 9, the figures which are auto-populated, it's not necessary that I should continue filing with the same figures. There is a possibility that I can definitely alter my figures in GSTR 9. But GSTR 9 is very clearly an annual return. Once I file it, matter is over. I cannot do any further changes. Please get a clarity here. Next 10 minutes is very important. Some great examples I'll give you with a lot of clarity. So please concentrate. GSTR 9 is annual return. And what we always try to do is that we will show the figures in GSTR 9 as per our books, because our books of accounts are actual books of accounts which have already been subject to audit. For example, if it's a company audit would have already been done. And if it's an income tax case where turnover is more than 1 crore, income tax audit would have been done. Correct, my dear friends? Everyone? Yes. one question before I proceed. We will rectify GST alone next month. That is what I'm trying to tell you. In GST alone, we did not rectify. 100 is the overall figure for the entire year. That's what I'm trying to say. We did not rectify at all. Mistake happened, which we did not realize. I hope you are clear, my dear friend. Yeah? If we would have realized during the month itself, we would have rectified during the month itself. We didn't realize, and later on only we realized. Now listen. That is an overall figure what I'm showing. Now let's say in GSTR1, overall yearly figures, GSTR1 we have shown 100, and in GSTR3B we have shown 120. Very good. That means we already paid tax on 120. So these are yearly figures I'm talking about. Yearly figures. I'm very clearly telling yearly figures, no doubt about it. But as per my books, my turnover is 130. As per my books, my turnover is what, sir? 130. That means what? If you observe very carefully, I short reported a turnover of, taxes short paid. For example, these are taxes figures only. Assume these are taxes figures. My tax figure as per GSTR1 is 100, but my tax what I paid as per 3B is 120, but my tax as per books is 130. But my tax as per books is 130. That means what? Taxes has been short paid, which we realized after the year is over. After the year is over. If it is realized during the middle of the year, then what we should do? If it is realized during the middle of the year, then what we'll do? Obviously, next month return we'll rectify. But here, year is over. After that, we realized. Then in that case, my dear friends, we have to pay that 10. And how do we pay that 10? For this purpose, they notified one form known as DRC03. And DRC03 stands for, name only says DRC, which stands for Demands and Recovery. This DRC03 form will open online, where new application will create. Under user services, create an application, will create a new application, and voluntarily will come forward and pay that 10. I'll show you in my GSTR 9. Don't worry. Getting clarity, guys? So like this, we have seen so many cases where GSTR 1 figures are in one direction, 3B figures are in one direction, and 9 figure, actual books are in one direction. And don't ask doubt, sir, how is it possible? Definitely possible. Human thing, mistakes can be done. And some mistakes will be very costly also. For example, one accountant is filing GSTR 1, other accountant is filing 3B, another fellow is doing annual return. Then gone only completely. Where are the figures in control? When one person is handling everything and on monthly basis, he is verifying 3B with GSTR 1, matching the numbers, checking the books, doing a reconciliation on monthly basis, then the books will become proper. If some mistake is done somewhere, gone. Getting clarity? Next. Now, one point, let me tell you here, an interesting case. And one point is very clear. One student is asking one question. Sir, in case excess payment, do we get refund? Yes. Under refunds, there is an option of excess payment of tax. Refund on account of excess payment of tax, we can apply through that option and we can claim refund. One question from our friend. Good question. Sir, can we pay DRC03 using credit ledger balance? 100% yes, my dear friend. That's a happy news and that's a good news that we can pay the DRC03 through using our electronic credit ledger balance also. It is not necessary that I should use cash ledger only. I can pay even using electronic credit ledger. That's a very good sign. Clear? Fantastic. I hope you got your answer. Yes, my dear friends. Come on. Now see. Next point. Sir, DRC03 is only for this purpose, what you have said, or any other purpose also. This is one purpose. Second purpose is, tomorrow when GST department has given one demand notice for any mistake what we have done, then in that case also that demands, we will pay through this form DRC03. Any demand, we will not report in 3D and pay. For 3D is a monthly return. Why will report in 3D and pay? So when any demand notice is given by GST department, we will use this DRC03 only. And DRC name only says demands and recovery. Like GSTR means GST return, CMT for composition, REG for registration, DRC means demands and recovery. Right? Demands and voice is clear for everyone. Guys, clear for everybody? Is the sound okay now? Please respond. Let me check what is the issue. Please hold on. Is the sound okay now, my dear friends? Can I proceed? Please do respond. Please, yes, then I move forward. Yeah, now is it okay? I hope now it should be fine. Yeah. So now listen, my dear friends. The interesting point to be noted here is that when I talk about GSTR 9, it is basically a reconciliation of data and trying to check what is the figures as per the books and trying to ensure that the figures as per books is matched with the GSTR 9. This is not audible. Please check from your end. There is an issue because from my side it's clear actually. Something is not on, it is just not on. Please try now, please, okay? Still not okay? Just hold on, then I'll just find out what is the issue.
Hello, students. Sir will rejoin again. Some disturbance is coming now. So please bear with us.
Guys, is my voice audible now? If it's all yes, then I'll proceed.
Yes, sir. It is okay.
Perfect, perfect. Thank you so much, guys. And sorry for the technical issue. So we'll go ahead. I'm also not sure what happened. So I really don't know. Maybe you wanted 2 minutes break. That's why all this happened. Anyways, fine. Let's proceed now. Let's not delay anymore. Come on. So I was discussing something interesting in terms of what happens in case where there are differences in numbers between GSTR 1 and GSTR 3B as well as books. So it is highly possible practical scenarios where I myself have seen so many cases where there are difference in numbers between GSTR 1 and GSTR 3B. In fact, I've seen a couple of interesting cases where 1 is on one side, 3B is on one side, books are on one side. I've seen that practically. But of course, nowadays, it's become very cautious. People have become more concerned about ensuring that the numbers in 3B and 1 are matching. On monthly basis, they are doing the reconciliation and checking their numbers. Now listen to an interesting point here. So let's say, when I talk about 1920 financial year, which is nothing but April 19 to March 2020. Now, one important point I'll discuss, kindly please concentrate, because this point has got an impact in terms of our GSTR 9. So please do focus. Now, what is the important point is something like this, that any amendment or change can be made in subsequent months returns, but not later than September month return. Which month return, guys? September month return following the end of financial year. This language is very important. Following the end of financial year. I wrote all this language by taking 2 minutes time because this language has got a lot of importance, not just from amendment standpoint, but also from claiming credit standpoint. For example, in one particular month, we missed out claiming credit. Then we'll claim credit in subsequent month. That month also we forgot, we'll claim credit in subsequent month. But the maximum time limit to take that missed out credit is due date of return for September month following the end of financial year. So for example, 1920 end of the financial year, September will become September 2020 return, which is generally due on 20th October 2020. 20th October 2020. Now, for example, the interesting point to be noted here is that by any chance, if we missed out something in 1920, be it related to input tax credit or be it related to amendment in the return. In fact, in section 37 in GST Act, which clearly says that if there is any mistake which is made in GSTR 1, and 39 says if any mistake is made there in GSTR 3B, and the maximum time limit for rectification is due date of return for September month following the end of financial year or date of filing annual return, whichever is earlier. In the similar manner, even with respect to input tax credit, we have got one section known as section 16 subsection 4, which clearly says that the maximum time limit to avail input tax credit is due date of return for September month following the end of financial year or date of filing relevant annual return, whichever is earlier. So now, in any mistake in 1920 or any credit which is not claimed in 1920, you can claim it before September return. So technically, you have got a time of 6 months to rectify any mistake in that 1 year or to claim any credit what you missed in that 1 year. That's where practically what we do is that in the month of April or May or June, in our office also we follow same system where our team will sit and check what is the credit that should have been availed in 1920, which is missed out. I will claim now. What is the credit that I should have availed in 1920? Did I claim anything excess? If I claimed excess, now I'll reverse it. Because in the 6 months under reversal column, I'll show reversal. That is the reason why in GSTR 9, when I'll show you, my dear friends, there is one separate table 10, 11, 12, which talks about the concept of the data related to 1920, which is shown in 2021, April to September. Because there is a high possibility that after the end of the year also, some data related to earlier period, we might show. Correct, right? So just for the sake of example, my dear friends, let's say in 1920, ITC to be claimed was, let's say, 10 lakhs. To be claimed was 10 lakhs. But actual claim was only 8.5 lakhs. That means what has happened actually, we have short claimed 1.5 lakhs. That means after end of the year, we have checked our two-way, done the RICO, and then realized that we did not claim a credit of 1.5 lakhs, which we realized that we have short claimed. Correct, my dear friends? So if it is 1920, now in April 20 return, we might claim that 1.5 lakhs. If you missed in April, you can claim in May. Missed in May, claim in June. Missed in June, claim in July. Missed in July, claim in August. Missed in August, claim in September. Missed in September, forget forever. As simple as that. Because you have time only till maximum September return. Now I'll ask you one question. There is 70,000 credit related to April 20. April 20 month. Now that also will claim, no, my dear friends. So what you will technically do, what you end up technically doing is, my dear friends, in April 20 return, in GSTR 3B, under the column of ITC, you will claim 2.2 lakhs because that is 70,000 related to current month, that is 70,000 related to April month, and 1.5 lakhs related to previous month. Now, you know that you have claimed 1.5 lakhs related to previous year. Yeah, you know that you have claimed 1.5 lakhs related to previous year. But how will you tell the GST department that whatever you claimed that 1.5 lakhs is not April month ITC, it is related to 1920? That you know, I know. But how will GST department know? That is the reason why in April month return, I mean to say in annual return, there is one separate column which talks about what is that input tax credit related to 1920 claimed in 2021. What is the output tax liability related to 1920 which is shown in 2021. That will clearly show in our GSTR 9. There is a specific importance for that table 10, 11, 12. That is very, very important. I hope we got a clarity on this. Extremely powerful concept. Yeah, before I proceed, I've got some questions. Let me answer that. Yeah. So one question from our friend, sir, is it for previous year only or for other earlier years also? No. In 2021 April to September, we might claim something related to 1920, not 1819. Over. 1819, September 19 only last. 1920, September 20 is last. Next. Sir, can we claim ITC by just mentioning in GSTR 9 of relevant financial year? The point is very clear. If you missed out in April to September also, then you show in GSTR 9. But already you would have paid the tax. Now what can you do? You cannot do that. The reason being very clear that the maximum time limit to claim credit is September return. If that is also gone, then over. You actually can't take credit. Because as per 16.4, law only told the maximum time limit to claim credit is due date of return for September month or annual return, whichever is earlier. So as such, you are supposed to claim that credit before September return only. And if annual return is filed before that, you claim the credit. My suggestion is always is that you should claim credit while filing 3B, not while filing 9. 9 is only reconciliation of data. You cannot bring a new figure in 9, telling that I missed out claiming credit earlier, now I want to claim. You can't do that because time limit is over. Next. Sir, if September return late filing like 25th October, whether claimed input in related to last year is eligible. No, my dear friend, because law only told due date of return for September month. And due date of return for September month is 20th October. That is as per law. But practically, people are filing September return late so that they'll claim credits. That games they are playing practically. I don't deny that fact. People are doing that. But as such, as per law, it is very clear that due date of return for September month. Law never told September month return. Law told due date of return for September month, which is 20th October. But still people are taking, that is always there. Next. Another query. Sir, is it possible to change invoice of GSTR 1? Yes. Do amendment, you can do. Next. Sir, as per amnesty scheme, a dealer can file GSTR 1 for 1819 with late fees. I mean, penalty means late fees. Then how can ITC can be claimed by other dealer? Other dealer ITC cannot claim because time limit is over. Just because amnesty scheme has come, amnesty scheme is only for purpose of filing your return, not for claiming credit what you missed. That time limit is over. You cannot do anything now. Next. So what is the due date for filing April 21 GSTR1? What percentage of interest is applicable? This is already covered in overview of GST returns. You can see there and refer to the notification related to COVID. You will get April GSTR1 due date there. Next. In case if I claimed more, that means what excess credit you claimed, whether I need, when I reverse it, whether I need to pay interest as there I evaded tax liability. Yes, I already told you if excess credit is availed or less output tax is shown, actually the interest rate is 24% per annum. In fact, there has been cases where practically I myself have seen that one of my client, he claimed excess credit in 3B. When I have done GST audit, but before filing GSTR 9, I observed that in books, the credit was less, but the credit what he claimed was more. And I reported that in my reconciliation statement. And he got a notice from GST department saying that please pay interest also. And he had no escape route because interest is mandatory in nature. There is no facility to recall that interest or waive that interest. So interest is mandatory. Next, another question. Sir, it becomes very difficult to keep record of GSTR 3B as we take net sales after adjusting and later we did not recall what adjustment is made in 3B. I mean, for this question, the answer is very clear. It is important that you keep a track record of how you have arrived at 3B numbers. Every month before filing 3B, ensure that you match with GSTR1 and keep the records and the working with you in Excel statements. In our office, what we do is in Excel, we keep a track of every working what we have done and what figures we have taken into account while filing 3B. That's the only option. So if you tell it is difficult to keep record, you still have to maintain records. That's the only option. Because end of the day, that will only protect you and that will only tell you what you have done. Because if you ask me, sir, 2 years back in 3B, how you got that figure? How will I remember? How will I even remember? Not possible. So what I do is I'll go back to my workings, open that Excel sheet and then check what adjustment I would have done in 3B and then find out the final numbers. Got it? Next. Another question. Sir, shall I show GSTR1 for previous month until date of filing 11 days? I did not get your question, my dear friend. Yeah, one more question. Sir, should we use some GST software for returns like ClearTax or department software? It's not necessary to use a third-party software of ClearTax, WebGST, practically third-party, so many softwares are there, but it's not necessary that you have to use third-party softwares. We still do have our regular software, I mean, income tax, government software that is well and good, and you can use that to file your returns. But it's not mandatory to use any third-party software. But of course, if you want some comfort or you want more relaxation, then you can use any third-party software. Because the logic is simple. If you want more comfort, you have to end up buying some softwares by paying some price. But of course, GST department software is well and good. Next, one more question. Sir, if you pay excess claim of ITC by DRC03 without interest, is there a possibility of getting notice from department? Possible. If GST department is conducting GST audit, and moreover, I myself have seen one case where after GSTR 9 is filed, GST department is issuing notices. In fact, for 17-18 financial year, already GST department started giving notices. In fact, one of my clients got a notice stating that in GSTR 2A, credit is only 10 lakhs, you claimed 12 lakhs. Excess credit, you claimed pay that 2 lakhs. I told, why will I pay? I will not match 2A and claim credit because the story of 120%, 105% came recently. And that too, still that 16(2) clause AA, what I told you in previous session, is yet to be notified through a notification. That's why I told you that practically a lot of people are ignoring 2A and 2B and claiming credit as per books. Next. GSTR1 is a monthly return only, no sir. But can we adjust this balance of ITC not claimed in before financial year through GSTR1? You can't do that. You have to adjust in 3B. How can you do in GSTR1? 1 is a statement of outward supplies. You have to do that in GSTR 3B. Yeah, one more question. Sir, claiming ITC, utilizing ITC, both are different. Yes, 100% right. If you claim ITC, ITC will come and sit in electronic credit ledger. You can utilize whenever you want. The time limit given in the law is only for claiming ITC. Utilizing, do whenever you want. As simple as that. Done. Can I proceed? Brilliant. Lot of questions are flowing. Come on. So let me start discussion about the GSTR 9 in terms of presentation format as to what are the tables involved and how do we do that reporting. Because some tables are very, very important. Of course, the major crux of GSTR 9 is what I just explained to you, but still we have got so many points there. Let's proceed. See that GSTR 9 annual return. This annual return is to be filed once for each financial year by registered taxpayer who are regular taxpayers, including SCZ unit and SCZ developer. Taxpayers are required to furnish details of purchases, sales, input tax credit, refund claim, or demand created, etc. in this return. See next point. Prerequisites for filing GSTR 1. What are the important prerequisites? A taxpayer should be registered as a normal taxpayer under GST at least for a single day in financial year. And taxpayers should have filed, this is important, taxpayers should have filed GSTR 1 and 3B for the financial year before filing GSTR 9. Because GSTR 9 is a compilation of data in 1 and 3B. In fact, one of my client, what happened? A new client, he came to me telling that please file GSTR 9. I started doing all the workings, but I was surprised to see that in 1 month, he did not file GSTR 1 only. 3B he filed, but 1 he did not file. And unless you file all the months 3B and 1, you cannot file GSTR 9. Yeah. One question has come up personally. GSTR 1, we show previous month sale. Can we add current month also? That is still the date of filing. Yes, you can do that. Definitely you can do that. Yeah, next. Guys, see the tables now. Come on. GSTR 1 annual return for normal taxpayers. You can do it online or you can do it offline. Offline is through offline utility. See next. What are the interesting tables we have got? Kindly please see. And before that, you can see one box, what is highlighted in red. GSTR portal will calculate GSTR 9 values in different tables based on GSTR 1 and 3B. I told you that for turnover, they'll take 1 figures and taxable tax figures they'll take from 3B. This is available as download in PDF format and will be auto-populated in different tables of GSTR 9 as well in editable form, except in table 6A, table 8A, and table 9, paid through cash and paid through ITC. What is that? We'll talk in detail now. Table by table, we'll see. First, table 8A. What is table 8A? So table 8A reflects your input tax credit actually. But you can see that table 8A is basically document-wise details of GSTR 2A. But practical problems we have got here, that technical glitches are coming where table 8A figure is showing something different as compared to GSTR 2A. GSTR 2A figure, if it is 25 lakhs, one client I have seen, GSTR 2A figure was 25 lakhs, but table 8A figure was only 2 lakhs. So shocking. 25 lakhs is only correct, but table 8A is only showing 2 lakhs. That's a technical problem. Don't be surprised, don't be shocked. Technical issues are very common. Technical glitches are very common. Like how in income tax, they have developed one new portal now, and we are still struggling to open the income tax portal only. That's the problem. So when new thing comes, it will definitely take some time. Technical issues are quite obvious and quite common. See now. Document-wise details of GSTR 2A has been considered for determining values of GST table 8A. And table 8A of GSTR 9 is populated on the basis of documents in filed form GSTR 1 and 5 of supplier. It should be filed. If remember, I told you that if GSTR 1 is not filed, but it is only submitted and uploaded, it will still come in 2A, but it won't come in 8A, because what will come in 8A is only what which are filed. Thus, all documents which are present in 2A will not be available here as documents which are in uploaded or submitted stage in GSTR 1 or 5 are not accounted for credit in table 8A. Data saved or submitted in 1 or 5 will be shown in 2A, but will not be shown in downloaded Excel file of table 8A, because table 8A covers only which are filed, not just submitted. Next point. Table 4, very, very important table. Details of advances, inward and outward supplies made during the financial year on which tax is payable. Advances, I hope you remember that on advances also we'll end up paying GST, and for that in GSTR 1, there is one separate table 11 related to advances. And one point, let me tell you, Shivateja, being a chartered accountant, if I get any advance from my client or my customer, on that advance, I'm required to pay GST. Time of supply will come when advance is received. But with respect to goods, we need not pay GST when advance is received. Because with respect to goods, time of supply is always when invoice is given or invoice is supposed to be given. With respect to advances, there is no liability to pay GST on advances. We will pay only when invoice is given. That is the reason why practically I've got one of my client who is a car dealer. Whenever he's selling cars to the customer, in lot of months, what happens is he will keep getting advances from the customer. On that advances, we never ever pay GST. We pay GST only when invoice is given. Because with respect to goods, there is no need to pay GST on advances. Come on. See the language what we wrote there? This table is used to enter or view the summary of outward inward supplies made during the financial year. Details will be auto-filled based on details uploaded by you in form GSTR1 and 3B during the said relevant financial year. Next point. See what are the columns we have got in table 4. Supplies made to unregistered persons, that is B2C, registered persons, B2B, then zero-rated supplies export on payment of tax, supplies to SCZ on payment of tax. Next one, deemed exports. Next point is important. Please see that point. F point. Advances on which tax has been paid, but invoice has not been issued. Advance we received on which we paid tax, but so far invoice is not given. Classic example, car dealer. Car dealer, we do not pay tax on advances, but construction companies, whatever advances they get, that they will pay GST. Then table 4G, inward supplies on which tax is to be paid on reverse charge basis. This figure generally they pick up from GSTR 3B. Then subtotal A to G above. Next point, credit note, debit note. This they'll pick up from GSTR 1. Supplies or tax declared through amendments, plus or minus. That is, because of amendment, the figures might go up or figures might come down. And next point, you see subtotal. Finally, supplies and advances on which tax is to be paid. That is H plus M. What is H? Subtotal A to G. M is subtotal I to L. Enter or edit. Because I also already told you we can edit the figures also. Edit the taxable value or taxes figures. And one point you see there, if the details provided are plus or minus 20% from auto-populated values, then cells will be highlighted in red for your reference and attention. So what they are trying to do is that in case where auto-populated figures, what you have shown, you have edited, and what you have edited is in variance of 20%. Then they are highlighted in red, telling that boss, their variance is there, which is more than 20%. Please get ready. It's something like a warning signal. Tomorrow, GST department may send notice. In fact, in table 4, below you can see a note there. The fields where system computed values would be modified by more or less than 20% shall be highlighted in red for reference and attention. It's something like telling you, boss, get ready. You have modified the figures by more than 20%. Yeah. Before I proceed, there is one question. Sir, is it necessary for every registered person to pay GST on advance received? If he is supplier of services, then 100% answer is yes. If it is goods, answer is no. Because with respect to goods, the GST liability will come only when invoice is issued or invoice is supposed to have been issued. When advance is received, GST liability will not attract. With respect to goods, there is no GST liability on receipt of advances. This point is important. Next. I hope you are clear. Next point. See this. Table 5. Details of outward supplies made during the financial year on which tax is not payable. What can be that case as? That is non-GST items. Yeah, see that this table is used to enter or view the summary of non-taxable outward supply or could be exempted cases. Details will be auto-filled based on details uploaded by you in GSTR 1 and 3B. Next point. See there. What are covered in table 5? Details of outward supplies made during the financial year on which tax is not payable. First one, zero-rated supplies without payment of tax, supply to SCZ without payment of tax. C point is very important. Please see that. Supplies on which tax is to be paid by recipient on reverse charge basis. For example, if I made some supplies on which recipient is liable to pay tax under RCM, then obviously I will not pay tax on that. Then exempted, nil rated, non-GST. And non-GST also includes no supply, then credit note, debit notes, and supplies declared through amendments. We'll enter the values and we can change the figures also. But if there's a variance of more than 20%, one highlight will come in red. Next point. Table 6. Table 4 was about outward supplies on which tax is payable. And table 5 is about outward supplies on which tax is not payable. I repeat, table 5 is about outward supplies on which tax is payable. Table 5 is about table 4, outward supplies on which tax is payable. Table 5, outward supplies on which tax is not payable. Table 6, details of input tax credit. This table is used to enter or view the summary of ITC. And obviously figures will come from GSTR 3B. It won't come from GSTR 1 because GSTR 1 is only a statement of outward supplies, not inward supplies. Next point. This is important. Please see that very carefully, sir. Table 6A, it is auto-populated based on 3B figures. Next point you see, inward supplies other than, I'm looking at 6B, inward supplies other than imports and inward supplies liable to RCM, but include service received from SEZ. And there are 3 bifurcations there: inputs, capital goods, and input services. Practically, one clarification is given by GST department stating that if you are able to bifurcate that inputs, capital goods, input services, you bifurcate. Not able to bifurcate, then put the entire figure under inputs only. Then, inward supply received from unregistered person liable to reverse charge. 6D, inward supply received from registered person liable to reverse charge. 6C, very important, import of goods, including supplies received from SEZ, then import of services. 6G is also important. Input tax credit received from ISD. What is ISD? Input service distributor. That also is covered. Now see one very important point, guys, that is related to 6H. What is that? 6H. Amount of ITC reclaimed. What is the story of reclaim? Guys, if you remember, I told you that one point. If recipient fails to make payment to supplier within 180 days from the date of invoice, whatever ITC is claimed, that will be reversed, that is added to output tax liability. And once payment is made to supplier, whatever ITC is reversed, that can now be reclaimed. This point already explained that to you. That kind of example is ITC reclaimed. Then subtotal, then the difference will come automatically whether you claimed more or you claimed less. And it is important to note that 6A figures are automatic as per 3B, and 6B, 6D and all we take as per books. There is a possibility that books and 3B ITC figures are matching. But there is a possibility that in books, the ITC figure is more, but we claimed less. Then gone, lost. It's lost completely because time limit is over. Getting clarity, guys? Everyone? And if government is happy when you claim less, we claim more only, they are sad. Next point. Transition credit through TAN 1, TAN 2. That is, my dear friends, this was actually applicable for 1780. Now this point has got no relevance because of a simple reason that this TAN credit was a concept where prior to GST law, when we were under service tax or excise duty or VAT, if people had got some credit on some goods which are left out, that credit they were allowed to carry forward to GST by filing that form TRAN 1. In fact, TRAN 1 stands for Transition 1. At that time, before 30th June 2017, because 1st July 17, GST has come into force. So at that time, we filed this form TRAN 1, TRAN 2 to claim the credit what we are eligible under old laws. Next point. Any other ITC availed but not specified above. That also will show if there is any other ITC. Next. Six A point already we discussed. Details of ITC availed. This is just an auto repeat, so ignore that. Next point. Table 7. Interesting. Table 6 was about ITC claimed. Table 7 is about details of ITC reversed and ineligible ITC. Whatever ITC we claimed, that was in table 6. Whatever ITC is reversed, that is table 7. Please note that table 4 was outward supplies on which tax is payable. Table 5 is outward supplies on which tax is not payable. Table 6 is ITC eligible. Table 7 is ITC reversed. See there? details of ITC reversed and ineligible ITC. This table is used to enter or view the summary of ITC reversed or ineligible during the financial year. See the columns. First, Rule 37. First point, my dear friends, Rule 37 is related to the story of 180 days condition. Then Rule 39 is related to input service distributor. In case where we claim excess credit, we will reverse it. Rule 42, reversal in case of apportionment of common credit related to inputs and input services. I explained that to you already in the previous session, where we have got some credit related to both taxable and exempted. Then we claim full credit. Then whatever is related to exempted, that we will do reversal. And Rule 43 is related to capital goods. And of course, next point, 17 subsection 5, that is block credit. Remember that block credit, guys? Exactly. Next, Tran 1, Tran 2, already I told you that was a story related to prior to GST. And if there is any other reversal, that also will show in table H1. For example, there could be a special case where 105%, 110%, that case somebody is doing reversal. Just an example. But any other reversal will report in table H1. Clear? So points to be noted here is that figures will generally be auto picked up here from GSTR 3B. And if any modifications you want to make, you can make that modification. Next point. Table 8, other ITC related information. This table is used to enter or view the ITC availed during the financial year. And what is the importance of table 8? Please see here. Table 6 was the actual ITC as per books. But table 8 is what? ITC, what is there as per 2A, which will auto-populate. Correct, my dear friends? Table number 8A will be auto-filled based on details auto-populated in 2A. Then 8B is important. That is total of 6B and 6H. And let me make you again go through there. 6B and 6H. 6B is about inward supplies and 6H is about related to what, my dear friends? Any other ITC availed. So these two total will come in the story of table 8. Then 8C, ITC or inward supplies other than imports and inward supplies liable to reverse charge. Once again, sorry. Yeah. See that. ITC on inward supplies other than imports and inward supplies liable to reverse charge, but includes services received from SCZ. Received during the financial year, but availed in next financial year. This point is important. Please see that line. No, ITC on inward supplies received during the financial year, but availed in next financial year. So ITC related to current year, but availed in next financial year up to specified period. Now, what is that specified period? April to September. I explained this concept to you already. Next, 80 ITC available but not availed. ITC available but ineligible, something like block credits. Then IGST paid on import of goods, IGST availed on import of goods as per 6C above. There are any differences? ITC available but not availed. And finally, total ITC to be lapsed in the current financial year. And that lapse story will come into picture only because of a simple reason that, for example, ITC eligible was, let's say, 20 lakhs. But what you claimed is only 18 lakhs. So automatically the balance 2 lakhs is lapsed. No doubt about it. That is the meaning of ITC to be lapsed. Now, one point you see, sir, here, one doubt you are asking. Sir, here, what is the use of 2A? We need 2B data. My dear friend, 2B data is only for purpose of monthly reconciliation. But overall, for annual return purpose, we don't use 2B data. We definitely use 2A data only. I hope your doubt is clarified, my dear friend. For yearly reconciliation, we don't use 2B data. We use 2A data only. 2B is only for monthly reconciliations for that 110%, 105%. Are you clear? Yes, perfect. Good. Let me proceed. Next point. Table 9. Details of tax paid. What is that line, sir? Details of taxes paid. Tax what we paid. And obviously what we would have paid is figures which are coming from GSTR 3B. So that's what we paid. So line only says details of tax paid as declared in returns filed during the financial year. So during the financial year, whatever return we filed, what is the tax we paid? This table is used to enter or view the tax, that is interest, late fees, penalty, everything paid during the financial year. See that details of tax paid during the financial year. But you have to see one interesting point. There is something called tax payable, and what is the tax you paid through cash? What is the tax you paid through ITC? For example, let's say if the payable figure is more than what you have paid, then difference you will pay using your DRC03 form. For example, if the tax payable figure is, let's say, 8 lakhs, but what you actually paid is only 7.8 lakhs, the balance 20,000 you will pay using DRC03 form. I told this point to you. Yeah. One question from our friend. Sir, but for excess claim of ITC, we use 2B only for comparison, right? Yes, 2B comparison is used for monthly purpose, not for yearly purpose. For yearly, we generally use 2A only. Next. So complete table number 9 will be auto-filled based on details provided by you in 3B for the relevant financial year. Paid through cash and paid through cash columns are non-editable, obviously, because that's already paid actually. Next. Table 10, 11, 12, 13. Very important. Absolutely important tables for a simple reason. I already explained to you. Read that line once. Details of previous financial year transactions reported in next financial year. That means something like 1920 data, what we reported in 2021. And the 2021 also April 21 to April 20 to September 20. Because I told you that details of one financial year may be reported in next financial year in April to September month. So see that details of previous financial year transaction reported in next financial year. See that, guys, important. Very important. Particulars. First one, supplies or tax declared through amendment plus minus. Then reversal of ITC availed during the previous financial year. Whatever ITC we availed during previous financial year, which we would have reversed in next financial year between April to September. And last one, ITC availed for the previous financial year. So whatever is related to previous financial year, which we availed in next financial year. Important. Clear, guys? So what is that title? Particulars of the transaction for the financial year declared in the returns of next financial year till specified period. So that is April to September. So some credit related to 1920 we would have availed in next year between April to September. That will clearly report here. Very important table. Next, table 14. Differential tax paid on account of declaration in table 10 and 11. What is the table 10 and 11? Amendments plus, amendments minus. I've shown that to you already. You can see that. Amendments plus, amendments minus. Table 10 and 11. Then, table 14. What is the differential tax paid on account of declaration in table 10 and 11? Clear? What is the 10 and 11? Supplies or tax declared through amendments. If you have paid anything, that will declare here tax figures in table 14. Payable figure as well as paid figure. Both will report here. Next. Before that, one question from our friend. Yeah, what is that query? Yes. Is this tables replace GSTR 3B? It's not that these tables are replaced from GSTR 3B. One point is very clear that these amendments figure are not from 3B. Amendments figures are from GSTR 1. From there, these figures are picked up. The whole logic of GST 9 is very simple, that whatever data we have shown in 1 and 3B, we are trying to consolidate all the data. And at the same time, we are also trying to showcase where the data related to one financial year, we would have shown in subsequent financial year from April to September. That also we are reporting. That is why from starting itself, I have been clearly telling that this 10, 11, 12, 13 table are very important. Because 10, 11 is tax declared through amendment plus minus, and 12 is reversal of ITC, 13 is ITC availed. Very important. Clear? I hope your doubt is clarified. Can I proceed, guys? We're almost coming to end of GSTR 9. Of course, 9C is there, don't worry. But we're almost coming to end of GSTR 9. Can I proceed? Are we clear so far? Good. One question from our friend. Sir, what is the... One question, wait. Sir, what is the difference between table 8C and table 13? ITC available for previous financial year. In fact, table 13 8C almost talk about same column. You can see that table 13 says ITC available for previous financial year. And if you see table 8C, the language is very clear. ITC on inward supplies, ITC on inward supplies received during the financial year, but availed in next financial up to specified period. So both are absolutely the same information what we are trying to report there. Clear? Next. Sir, GST 9 is also filed through online and offline. Yes, both options are there. You can either file through online utility or you can, online option, or you can file through offline Excel utility. But 9C has to go only through offline. For 9C, there is no option of online. For 9, you can do online also. Next. Just to recall, guys, what was table 4? Outward supplies on which tax is payable. Table 5, outward supplies on which tax is not payable. And table 6, details of ITC. Table 7, ITC reversal. Table 8, other information related to ITC. Table 9, details of taxes paid. And table 10, 11, 12, 13, very important. Current financial year details shown in next financial year. And table 14, what is the differential tax you paid on account of 10 and 11? That is amendments plus minus. Then table 15, 16, 17, 18, small information, please see that. Table 15, particulars of demands and refund to enter or view particulars of demands and refund related to financial year. And this will generally come automatically. Then table 16, any supplies received from composition taxpayer, deemed supply by job worker, and goods sent on approval basis. What is goods sent on approval basis? Goods sent on approval basis means it is something like I sold goods to somebody, but on approval basis. That means my sale transaction is complete only when recipient approves the goods. If recipient does not approve the good, then my sale transaction is not complete. My sale transaction is complete only and only when recipient approves. Yeah. And what is the story of job worker, guys? Let me tell you. The difference between job worker and subcontract is simple. Job worker is somebody to whom I give the materials and ask him to manufacture finished product and then give back the finished output to me. But the point to be noted here is that as per law, any input sent to be job worker should be received back within 1 year. And any capital goods sent to job worker should be received back within 3 years. So whatever raw materials I sent to job worker should come back to me within 1 year. And for capital goods, the time limit is 3 years. Now, don't get one doubt. How will government track these details? How will they know when I have sent, when I received back? For that purpose, my dear friends, let me tell you, any principal who is sending the raw materials or capital goods to job worker, he should file one form known as GST ITC 04 on quarterly basis by 25th of the month succeeding the end of quarter. And in that, I will clearly show what are the details of the goods I sent, what are the goods I received back. That we clearly show there. That's how they get to know. Yeah, before I proceed, one question is there. Sir, where can we get monthly summary of 2B? Wait. What is that question? Where can we get a monthly summary of 2B in order to reconcile with actual ITC claim, in order to find excess ITC claim and pay via DRC03 at the time of filing GSTR 9? You can get ITC comparison table in GST portal. Overall comparison, you get the table, what is there in 3B, what you have claimed, and what you are eligible in 2A. But monthly summary of 2B is not eligible. That monthly summary of 2B, you should download by yourself and check. 2A summary is coming online now, but 2B summary is not coming. That you have to check by downloading. And of course, for yearly comparison, we use 2A only, prima facie. Next, another question. Sir, can we manually edit all auto-calculated cells? Definitely manually you can edit. And if the difference is more than 20%, that will show in red. Saying that, please observe that the difference is more than 20%. Next. Yeah, another point. Yeah, that's related to our branch. Yeah, next. Yeah, table 17 and 18 is HSN summary, guys. Presently, it is optional. It's not mandatory. HSN summary of outward supply, HSN summary of inward supplies. But government recently notified that with effect from May 2021 returns, it is mandatory that you have to show your HSN summary in GSTR 1. And at the same time on invoice also, you have to show the details of your HSN. At the same time, where turnover is more than 5 crores, you have to show 6-digit code. And if turnover does not exceed 5 crores, you have to show a 4-digit code. So it is mandatory to show that HSN details in GSTR 1. And from there, in the long run, it will automatically pick up in GSTR 9. But as on today's date, it's not mandatory to file table 7 and table 18, table 17 and 18. Clear? Everybody, guys? Good. So this is the story of HSN details, what we will fill. HSN code, unique quantity code, same like how we have shown in our GSTR 1. That's it. With this, I'm done with the story of my GSTR 9, where I clearly wanted to give you details about how does GSTR 9 looks and what are the interesting columns and tables in GSTR 9 and what is the importance of every table and every column, so that we clearly get a clarity of thought on what to fill, where to fill, and how to fill that. That's why I wanted to spend some good time on that. Clear? Now, without any second thought, let me spend a little bit time on this. Please give me some more time. Kindly please give me some more time. I'll also spend a little bit time on about GST audit. This also I'll give you overview, because this reconciliation statement is also important. Even though GST audit is removed now, the chartered accountant, cost accountant will not sign the audit, but still reconciliation statement is still in force, where we will reconcile between audited accounts as per Companies Act or income tax audit and verifying your GSTR 9. Whatever differences are there, we will show there why there is a differences. But practically, we try to ensure that differences are not there, because whatever figures are there as per books, that figures only we try to show in GSTR 9. And if any excess credit we claim, or if any tax is short paid, we pay that through DRC 03. We always try to ensure that my reconciliation statement is clean, because if reconciliation statement differences are there, high possibility that notice will come from GST department. That is the reason why we always try to ensure that we keep the reconciliation statement clean. That's why I always tell my client, sir, more than 9C, GSTR 9 is important, because 9 is annual return, where we are trying to show the final figures. For example, I tell my client, in books, if it is 120 tax, but you paid only 100, better. In 9, I will show 120 only. That balance 20 you pay using DRC 03. So that when I'm preparing reconciliation statement, what is the tax as per books? 120. What is the tax as per GSTR 9? 120. Difference is 0. That's the whole idea why we are actually very, very cautious when we file GSTR 9. In fact, as a chartered accountant, since last 3 years, in whatever GST audits I conducted, 17, 18, 18, 19, 19, 20, every time I have always been, and our team has always been cautious while filing GSTR 9. 9C is a small task, because 9C is just a reconciliation, reconciling your books and 9. But we try to make sure that the 9 is matching with books, so that we will not have any concern in reconciliation statement. That's why it is important that you make sure that you are very clear while filling GSTR 9. No sort of mistake can happen while filing GSTR 9. Numbers should be accurate and then filed. Yeah, one question. Sir, if we use which is related to same chapter number and tax rate is also same. One question, what is that? Yeah, tax rate also same. In this case, GST department will send notice. Example, 710812, we use 710813, but GST rate is same. One point is very clear. In case where turnover is more than 5 crores, then 6-digit HSN code is mandatory. But if turnover is not more than 5 crores, then simple, you can just show 7108, you need not show 1213 also. But generally, GST department may not come up with notice for a reason, because GST rate is same. One small clerical error you have made in reporting the HSN code, so they might ignore it. Next. But I myself have not seen cases where notice has come up because of difference in HSN code. When the taxes are perfect, they will not trouble. Next. Sir, if the client is claiming ITC more or less with respect to 2B every month, but at the year end, is it sufficient to compare a overall ITC claim with 2A and pay the difference amount by DRC 03 at the time of filing GSTR 9? Perfect. In fact, that is what we are supposed to do, and that is what we are actually doing now practically. Since 1920, we became very cautious, where we are telling the clients, let's claim as per 2B. At the end of the year, check what is there in 2A. Check what we are supposed to claim. Anything what you missed out, claim now. For example, 1920, whatever you missed out, claim in 2021 April to September. As simple as that. And if by any chance, overall, when you compare April 19 to 20 and April 20 to September 20, if you still claim anything excess, then pay while filing GSTR 9 through DRC 03. Simple. Perfect. Next. HSN code. Yeah, HSN code is that HSN code, 6-digit code is mandatory where turnover is more than 5 crores. I told you this point already. Yeah, perfect. Good. So let's spend a little bit time on 9C, guys. That also let me spend some time and give you some knowledge and insight into that. Then we can close this. Say, come on. GSTR 9C is a reconciliation statement required to be furnished by a taxpayer whose turnover exceeds 5 crores in a financial year while filing his annual return in GSTR 9. It should be prepared and certified. Sorry to say, but recently in the Finance Act 21, they removed this concept of signing by chartered accountant, cost accountant. But of course, even though our sign is not there, but still client will come back to us for preparing reconciliation statement. And the reconciliation will be between annual return in GSTR 9 and figures as per audited annual accounts. That's what I told you. That's where we always ensure that GSTR 9 figures will go as per annual accounts audited, so that in reconciliation statement, you will not find differences. Yeah. 2 more questions. Sir, same provision applicable for SAC 2? Yes. Service accounting code also will apply same provision. Specifically, they did not tell, but we are applying the same concept for SAC also. But notification spoke only about HSN. Then another point. Then, sir, we can claim ITs as per 2A instead of 2B every month in filing 3B. No, monthly basis you have to follow 2B. You can't follow 2A. If something is missed in 1 month, you can claim in next month. No, what is the problem? I already told you, if somebody, some other party who filed GSTR 1, if he filed after the due date, then it's not reflecting in 2B. Then you don't take this month, but next month you will take. No. So for yearly recourse, we use 2A. But for monthly verification of that 105%, 110%, we use 2B only. Monthly purpose, you can't use 2A. You have to use 2B. Are we clear, Ravi? Can I proceed, guys? Yeah, please give me some more time. I'll complete this. Don't worry. Yeah. Thank you. Come on. See this. See this. Come on. What are the prerequisites for filing GSTR 9C? User should be registered and should have valid GSTIN. He should have credentials, obviously. And user has filed GSTR 9 for relevant financial year. And guys, without filing GSTR 9, 9C will not open only. Your 9C will open only after filing GSTR 9. Because you have to understand that in GSTR 9C, 9 figures are automatically populated in 9C. Whatever figures we have shown in 9 will auto-populate in 9C. Our audited books figure, we will enter manually. But 9 figures are auto-populated in 9C. That's why without filing 9, you can't open 9C at all. Next point. Aggregate turnover of such registered person during financial year exceeds threshold as notified by government. And I already told you it is 5 crores. Next point. He should have got his accounts audited, accounts audited as prescribed. And obviously, if it's a company, he would have got accounts audited as per Companies Act. And if it is not a company, then definitely he would have got audited accounts as per Income Tax Act at least. Now, you don't ask me one doubt, sir, what if income tax audit is not done? That is not possible because 9C is applicable only for those whose turnover is more than 5 crores. And obviously in income tax, if turnover is more than 1 crore only, we do income tax audit. So how can you ask a question where, sir, what if audit is not done? That's not possible. Clear? Yes, go on. Next point. See that. 9C. GSTR 9, GSTR 9C. First, sir, this is one of my client data, what I picked up in terms of the data, what we show in reconciliation statement there. Please see that. Financial year, GSTIN, legal name, trade name, and name of the act if you are liable for audit. In fact, this client of mine is not a company, but audit has been done under Income Tax Act because turnover was beyond the threshold limit under income tax. That's why we have shown Income Tax Act. But see, 4A point important is the person making a reconciliation statement, same person who conducted the audit of mentioned GSTIN. I put no because for this particular client of mine, I am not the income tax auditor. I am only the GST auditor. Income tax audit is done by some other chartered accountant, but I am doing only GST audit. That client always has a thought, if income tax audit, GST audit, both are done by different chartered accountants, better output will come. I also thought, fantastic, give me GST audit only, no problem. So if income tax audit, GST audit, both, I only would have done, this would have been yes. Next point. Reconciliation of turnover declared in audited financial statement with the turnover declared in GSTR 9. First point, turnover as per audited financial statement for state or UT under same PAN, and turnover should be derived from audited financial statement. This is 25 crores in this case. Next one, unbilled revenue at the beginning of financial year. So unbilled revenue is something like, for example, income has been accrued. Income has accrued, but so far we did not raise the bill to the customer. For example, guys, when I conduct audit of one of my client in one financial year, I conducted audit, income is accrued, but so far I did not raise the bill. But if I follow accrual system of accounting, I would have already passed an entry in my books that this income is accrued income, but it is not yet billed to my customer. Clear, my dear friends? So what is that language? Unadjusted revenue at the beginning of the financial year. That we'll add. One question before that. Sir, in the medical products company enters 8-digit HSN code, but according to 9C we enter 6-digit. Then which digits we enter under HSN code? 6-digit is mandatory. 8-digit also if you show, there is no problem at all. 6 is mandatory, but if you show 8, GST department is more than happy. Next. Unadjusted revenue at the end of financial year. Unadjusted revenue is something, unadjusted advances at the end of financial year. It is something like advance what we receive on which we already paid GST, but we are yet to issue the invoice. Next point, deemed supply under schedule 1. Deemed supply means what? Already explained that to you, my dear friends. Classic example, supplies between distinct persons, where even though there is no consideration, still it is regarded as supply. One GST number to other GST number, where PAN is same. Next point. Come on, next table you see, please. Credit notes issued after the end of financial year, but reflected in annual return. Trade discount accounted for in audited financial statement, but are not permissible under GST. Trade discount is something like commercial discount, which are accounted in audited financial statement, but not reflected in GST. Then turnover from April to June, that's not relevant now. Unbilled revenue at the end of financial year, unadjusted advance at the beginning of the financial year. Then credit notes, adjustment on account of supply of goods by SCZ unit to DTA units, SCZ to other than SCZ. Then turnover for the period under composition scheme, adjustment in turnover under section 15 and rules thereunder, because per section 15 there are some adjustments to be made to transaction value. Section 15(2) talks about adjustments to transaction value. Then adjustments in turnover due to foreign exchange fluctuation, adjustments in turnover due to reasons not listed above. And after all these adjustments, we will show what is the turnover as per books, what is the turnover shown in annual return. And you can see there, my case, there is unreconciled turnover of 32 lakhs. And the reason was very clear, which I wrote a comment there. Difference is on account of financial credit note, which is a commercial credit note, which is given in accounting terminology, but it is not under GST, because under GST law, credit note to be given with the GST before September. But if there is any discount given, which is a non-GST, which is not having a GST impact, it is called a financial credit note. Getting clarity? Yeah, one question. Sir, if there is any difference in ITC claimed as per audited financial statement, incorrect value, and GST 9 correct value, both the tax audit and GST audit are done under same office by different CA. Is there any risk for CA who perform tax audit? Obviously, yes, because it's important that you should have properly checked in terms of what is the value. Of course, GST department will not ask him, but income tax department will ask him, how did you arrive at that figure? If scrutiny comes up. If there is no scrutiny coming up, then there's no problem at all. Clear? Everybody? Yes. Next point. Reconciliation of taxable turnover. Previous point was total turnover, and now the point is about taxable turnover. See that figure? Annual turnover after adjustments is 25 crores. What figure you have there? Then value of exempted, nil rated, non-GST 71 lakhs figure is there. Then zero rated supplies without payment of tax. Then supplies on which tax is to be paid by recipient on reverse charge basis, and taxable turnover after adjustments is A minus B minus C minus D. Total turnover minus this, what we get is the taxable turnover. Then I'll compare the taxable turnover with taxable turnover shown in GSTR 9. And difference, of course, it is financial credit note. Yeah, one question from friend. Whether tax liability will arise on account of financial credit note by showing this unreconciled? Obviously, no, because this financial credit note did not have impact in GST. And already GST would have paid. For example, if I do a sales of 100, on 100, I already paid GST. Now, if I give a financial credit note of 20, I did not show a GST impact on that. Then obviously what will happen? For that 20 rupees, no treatment will come. Because in GST, I did not reduce my tax. And other fellow did not reduce his input credit. So no problem at all. So no tax liability will come because of this financial credit note. Because tax is already paid. Clear, my dear friend? Good. Next. Zero rated supplies with the tax, where to show? That is already covered in the top. Please understand that is already covered in the top. When you are talking about turnover as provided financial statement, and here turnover as per GSTR 9, they're already without payment of tax. I mean, with payment of tax is already covered there. Getting clarity? Without payment of tax only is what we'll reduce here, because we are comparing the taxable turnover. Next. Any other query there? Yeah, done. Next. Reconciliation of tax paid, rate-wise tax liability. 5% how much you paid, 12% how much you paid, 18% how much you paid. And these figures we ascertain from GSTR 1 in terms of taking that summaries. Next. And the bracket that RC means reverse charge. Don't be surprised what is RC. Next point, that late fee is interest and all. Total amount to be paid as per tables. And you can see total amount paid as per declared in annual return. This is what he paid. And if you see that in my client case, there's an unreconciled payment of 11,335. And we have found out that 11,335 he paid excess. An unreconciled payment, I wrote the reason, excess payment of IGST has been made. So I wrote the comment there, excess payment is made. And because of which, no impact will come for a simple reason, because already we paid excess. Now if you ask, sir, can you apply for refund? We do not go for refund because amount is small. By any chance, if the amount would have been higher, I would have gone for refund. And we have got a time limit of refund of 2 years. Clear? Next point. Then table 11. Additional amount payable but not paid due to reasons specified under table 6, 8, 10 above. Already we discussed that 6, 8, 10, if anything is payable, that also will show the figures here, what is payable. Then coming to table 12, this is important, reconciliation of input tax credit. So far we reconciled output figure, now we are reconciling input figure. Now please see, ITC availed as per audited figures is 3 crores figure is there. Then ITC booked in earlier financial year but claimed in current year. ITC booked in current year to be claimed in next year. Like this, nothing was there in my client case. Then ITC as per audited figure is 3 crores, but ITC claimed annual return is 3 crores 18 lakhs. He claimed excess. He claimed excess, my dear friend. That is what he has done in annual return. So below, if you see, there is an unreconciled turnover of 4 lakhs. And what is the comment I gave there? Please see. Difference in ITC on account of reconciliation has been reversed. And this is what we have done actually. We made the client reverse that input tax credit. And if we reverse, that means automatically we have paid that amount. Clear? Next. Table 14, it is optional, which we are not showing. And in this last 3 years, never I filled table 14 because it's practically very difficult. See that. Reconciliation of ITC declared annual return with ITC availed on expenses as per audited financial statements. That is purchases, how much ITC, freight, how much ITC, power, how much ITC. So expense wise, items wise, we are trying to show what is the ITC related to each expenditure. And practically very difficult. That's where they told it is optional. And so far, never we have filled these tables. Clear, my dear friends? Everyone? Yeah, next. See one reason what I wrote there. Table 14 has been optional. That's what I told you. Table 16, tax payable on unreconciled difference. If anything is payable, we'll show there. But in my client case, already we have done reversal. Then, point 5, that is table 17. What is that? Auditor's recommendation on additional liability due to non-reconciliation. Because of non-reconciliation, if any additional liability is payable, That is, if any amount is payable because of non-reconciliation, that figures also will show. But in my client case, nothing was payable because already whatever excess ITC he claimed, that we already made him reverse. And I already told you, practically we always try to ensure that we match GSTR 9 with figures as per books, so that in 9C we will not have any additional liability. That we try to follow practically, because in auditor comment, if I show that there is something payable and the client does not pay through DRC 9303, then gone. 100% GST department will catch and issue notices telling that please pay this along with interest and penalty. Penalty we may ignore, but interest we can't ignore. Finally, any amount payable. Finally, last point, that common point, I hereby confirm and affirm that it is true and correct to the best of my knowledge and information. That is a standard statement given by chartered accountant. No doubt about it. Clear, guys? So these are the interesting points in GSTR 9C, which I really wanted to discuss with you. Of course, 9 is very important. If you have done perfectly 9, then 9C is definitely a simple task. Yeah. One query from our friend before I complete this. 1-2 queries are coming. Sir, for filing of GST returns, is there any requirement of other than GSTIN? Of course, GST number is mandatory and data is required. Without that data or information by the client, how do we file it? Next. So what is the difference between 1.5 crore turnover who opt for quarterly return and one who opt for QRMP? 1.5 crore turnover, he need not mandatorily show IFF. And QRMP also, IFF is not mandatory. But at least that option of IFF is there. That is a point. Next. Another doubt, practical doubt, sir. Exempt supply wrongly filed as 0% supply. How to rectify, sir? But correctly filed in 3B. It's okay. I mean, even though exempt supply you have shown as 0%, that will not have any tax impact. So I think it's completely fine. You will not have any issue. If you want to rectify in GSTR 1 and amendments, you can do that. But amendments column, you really cannot amendment exempt supply and 0% supplies. So it's completely okay. It will not have any impact at all. But if you want to correct in GSTR 9, you can do that. Yeah, that's what our friend also told. We can correct in GSTR 9. Good. Yeah, another question from our friend. How to reply to notices from GST department? You said you will discuss at the end. I'll discuss. Don't worry. I'll show you that. I'll take 2 minutes and show you. One more question. Then if he is not filing IFF, how GST credit will show in 2 of the dealer? That's what is the point I told you already right from beginning of GSTR 1, that IFF is not mandatory. It's optional. But if you don't do IFF, recipient will not get the credit. That's why we always say that, my dear recipient, please ensure that to enjoy the credit, please chase your supplier and tell him to file in IFF. Yeah. I'll take 2 more minutes of time. So please give me that. Yeah, thank you so much, ma'am. Yeah, since students are also interested and curious, let me show you. So this is one of my client's case notice, my dear friends. So what has happened in GSTR 9, you can see that one notice has come stating that particular amount is payable. In fact, he gave a notice stating that some 30 lakhs amount is payable. And we reconcile all the differences why that amount is payable. And like this complete columns they give why that amount is payable. And I want you to look at point 12A. Increase in liability because of difference in liability on outward supplies between 1 and 9. He told that in GSTR 1 you have shown one figure, GSTR 9 you have shown one figure. For the difference you pay the tax. Then we clearly gave an explanation that the difference has come because, if you remember, I told you one client case, GSTR 1 for July month, when I filed, the figures got doubled because of technical issue. So what has happened now automatically in GSTR 1, double figures have come. So when double figures have come, there is a difference between 1 and GSTR 9. And it's asking me to pay that. So I gave a clarification by replying to the notice saying that I will not pay. And one more demand he raised, see that point number 6, no? ITC to be recovered. ITC to be recovered on account of excess claim over 2A. ITC to be recovered on account of excess claim over 2A. 3 lakh, he told that you claimed credit more than your 2A, that also you please pay. For that, my dear friends, we clearly responded. How did we respond? That also I'll show you. Just give me 1 minute. How it will look, where it will look, that I'll show you. With that, I'll complete my discussions. Yeah, hold on. Give me a minute time. I'll complete this. Thanks for your cooperation. Yeah. So guys, this is the GST portal. How it looks, you know that. So let me log into that particular client. So in services, my dear friends, there is an option of user services. There, I have an option of view additional notices or orders, where I can see the notice given by GST department. Like this, they have given a show cause notice stating that for the difference amount, please pay. That is what is a notice I have clearly shown you. The notices column I have shown you. Now see the reply, what I made. I'll show you that reply. Don't worry. Is the reply visible? Madam, is that reply document visible, ma'am?
Yes, sir. Yes, sir.
Yeah. Please see that reply, my dear friends. To so and so assistant commissioner, I gave a submission like this. Please read the first point. In relation to turnover difference observed between 1 and 9, we wish to submit that there were technical issues at the time of launch of GST portal. In the month of July, when we uploaded the invoices, error has occurred. Accordingly, we have uploaded the data again. However, to our surprise, data was double uploaded, which we could not be rectified. We understand that the same is because of technical issues only. We would be happy to submit all the copy of invoices related to outward supply for your kind perusal. However, we have correctly discharged the tax while filing monthly 3B. So I clearly told that while filing 3B, all figures we have reported correctly. No doubt about it. Then for 2A and 3B differences, I told them that very clearly. See the line what I wrote. During 17-18, there was no such requirement in the provisions that credit can be taken only if the same is auto-populated in 2A. The said requirement has only proposed now in Finance Bill 2021. Earlier, there was never a condition that credit can be claimed only if it is reflecting in 2A. So we understand that such requirement, if any, would be applicable only from the date that Finance Bill receives the assent of President and it is notified forthwith. If you remember, I told this concept to you. We submit that recipient, see that line, recipient should not be penalized for non-filing of GSTR1 by supplier within the due date. Further, we wish to bring to your kind notice that as per report updated, latest report, what has happened is credit claimed in 3B is less than 2 lakhs. Then I actually went to the assistant commissioner personally and I discussed with that madam and discussed with her telling that, madam, you are telling that 2A figure is less, what I claimed is more. You are comparing the figures at the time when I filed annual return. But today when I see my 2A figure is more, what I claimed is less. Will you give me refund? She told, how is it possible? Then I also told, for the difference, why will I pay? Simple reason, because that time in 17, 18, 18, 19, there was never a concept of paying that. Getting clarity, guys? Wonderful. So that is how we actually reported and replied to the notices practically. Yeah. So 1-2 queries, then I'll complete the story. Yeah. One question. So IFF is not mandatory. Then can I file GST1 within the due date as per Act? Yes, you can do that, my dear friend. One more question. Sir, though it is basic for better clarity purpose only, why a company should take registration in all the state in practical purpose? Is it possible to operate with single registration by additional place business in other state? You can have an additional place of business within the same state, but in another state, if you have additional place of business, you can't call it as additional place of business. In separate state, separate registration is mandatory. I'm sure with that example, what practical case of notice and reply, you got more clarity in terms of how do we reply to that. I've shown you so that you guys were interested at the same time, you get some practical connect to that. Thank you.
Thank you, Tejas, for your wonderful and excellent presentation on today's topic 9 and 9C. Actually, in fact, my students have posted the message in the chat box that we can sit for 2 more hours with you. That those words can only understood from those words how much value addition they had from the last 4 days. Really wonderful, sir. You have clarified so many of our doubts of our students. Thank you so much. Also, I thank all the students for joining the programs. And as I said already, that we will plan another series of programs on GST, on specific sectors, and also on invoicing and TDS aspects and all. Definitely, your interest in updating your knowledge will definitely boost up our energy to conduct more and more programs. And I'm conducting these programs only because of the support of the management committee of Vijayawada branch, and our secretary of Vijayawada branch, V. Narendra Babu sir, is with us to address you and propose vote of thanks. Sir, over to you.
Is audible, ma'am?
Yes,
Yeah,
sir.
please go ahead, sir.
Please.
Yes, sir. It is. I feel it is a very great opportunity, sir, and I feel happy to spend some time with our future chartered accountants. Yes, friends. This 4 days program on filing of GST returns law practice, and I'm here as the secretary of the Vijayawada branch and respected chairperson of SICASA and vice chairman of Vijayawada branch, CA Srita Shirin Garu. And today's our 4 days resource person. It's a very great, sir, because of you are spending valuable time to student friends. Okay. Sivateja Garu and my colleagues in the managing committee, SICASA committee. I hope SICASA committee is there, and because I will share. Okay, my future child accountants of India. Good evening. On behalf of Vijayawada branch of SASF ICI, I would like to convey my special thanks to our resource person, CA Sivateja Garu, for exemplary presentation on GST, perfect the knowledge of our students, sir. It's a wonderful, sir. Actually, last 1 hour I spending following your session, and whatever the 4-day sessions in YouTube which we have, I also updated that. This for 1 hour I spent that. Okay, your everyday session how is going on? Yes, I felt very happy. And it is also on behalf of Vijayawada branch, definitely our journey with you in future also. And we assure that, sir, for the members also.
Yes.
And if it is your permission is waited, definitely we will plan accordingly, sir. And my dear student friends, I appreciate to each and every student with your committed participation. We completed grand successfully for 4 days session of these programs on regarding to the GST. Yes, GST from registration to GST 9C, it is a lot of subject. It is not possible to learn 4 days, but because of such faculty, their experience is counted. Because of their experience, you will able to understand within 4 days the subject. Otherwise, we can't able to. For enhancing your knowledge, you are sitting and learning these 4 days. Definitely, by my bottom of my heart, I'm appreciating each and every student. And finally, my dear student friends, our Vijayawada branch is planned to conduct more and more programs. Your chairperson is always planning bunch of programs, not single program, bunch of programs, because of madam committed this year. Once they take the charge, committed only practical area. She wants to share and prepare the students in the area of practical knowledge. Theoretical knowledge, everyone can able to share that, but practically the student has to prepare and improve their knowledge. For that reason, such type of faculty is available with us, and because of like Sivateja sir and previously ROC and all the things are provided, some of the faculty, very good resource persons are available to us, and with those persons only our target to reach the students and enhance of existing knowledge of the students. Then they made it more and more practically also. Okay, and with this brief introduction, brief vote of thanks, and students also, actually students, already we got notice from the students friends. Our madam is every time madam come with bunch of programs to the in front of MC, and managing committee is decided to provide a lot of knowledge to the students. Without no more arguments, no more discussions, the program automatically approved by our committee, always, because of students only. My dear students, because now you are maybe student, in future definitely you are be part of with us in our profession. And another thing is also, actually real warrior in the office, you are that. Okay, otherwise, otherwise the student is not having any practical knowledge, theoretical knowledge, office shall not move. Okay, actually it is a warrior. Why I am using this word nowadays? COVID situation, everyone is talking this front end warriors, like that. The students are the front end warriors. Okay, without your improving your knowledge, okay, the office will not sustain, your boss will not enrich and things will be smoother way also not possible. Because please be part of the branch every time. Definitely come with a lot of ideas and lot of proposals also. Definitely our branch is committed to improve and share to knowledge through such faculty. And our branch is also promised to conduct more and more programs to user in the area of practically. And another thing is also, I want to share one of the announcement regarding to the vaccination drive is going on, conducting our branch. Total of SIRC of 45 branches. Our branch is one of the biggest branch which is going to be conducting your vaccination drives for the benefit of the members and students families. And actually I thought that madam was shared the Google form in the respective WhatsApp sites. Okay,
I already
kindly
said.
fill, yes ma'am, kindly fill that, kindly fill that. And uh, please, definitely it will be soon in that we will going to be announced that all are, it is required to vaccinate, sir. With this brief little bit of my thoughts I am sharing here, I got this opportunity. Thank you ma'am, and thank you your bunch of knowledge is also, sir. And I observed last 1 hour you're sharing in the GST or 9 and 9 CV in the simple way, in the passionate manner, in the patience manner. And the students are also the questions I am observing that the students also raising the questions like members, because
Very
Daily,
true. Very true.
yes,
Very
sir.
true.
daily almost 70 to 80 queries he is handling.
Oh,
2
nice,
hours
sir.
time along with the subject. It is very wonderful
Nice,
to me.
sir. Nice, sir.
I never seen in fact.
Nice,
Very,
sir.
very
Nice,
great
sir.
thing on your part.
Thank you so much.
Yes, sir. I am observing last 1 hour. The questions are
So
coming
many.
and coming. Because the students are also, I think they are not students. They are really professionals. I appreciate this to each and every
No, as you
student.
said, they're asking questions like chartered accountants only.
Yes,
Yes, sir. Yes, I observed that. Some of the questions I also not having that much of questions. I didn't have that also actually. But the students, how they are involved in the learning of the subject and how they are involved in the knowing in the practical area. Okay, how it is the enthusiasm of the students, how they are uh, committed to learn it. Very, very great, my students. Because actually, I thought that now the students are 40 to 45 at the time of joining. Actually, it is required to join more than 100, but students also treating that
Actually,
even.
they are
Yes, ma'am.
watching WhatsApp links through WhatsApp link. So many, almost 2000 users are there. So maybe due to lack of time management and exams time, no, they are managing. They are, spending the time in other time, I think. also.
Oh, nice. Okay. Yes, once actually, ma'am, we are going to be issue the participating certificate on behalf of Vijayawada branch also. Yes, already was discussed in the MC, and we are going to be issue the student friends. Definitely, you will get benefit from this. You will get the participation certificate. This course. Okay. And with this, I feel very happy spending few time with the future chartered accountants of our profession, and with our knowledge bank of Sivateja Garu in the area of indirect taxes. And nice to
And
meet you,
also
sir.
direct access. And also direct access.
Also direct taxes.
Yes.
Yes, I thought that once I saw your face, I thought that we met somewhere else, but I also don't know. Definitely, sir. Thank you, ma'am.
He trained almost more than 12,000 students, sir.
Oh, nice, sir. Nice, sir. We are faculty.
Yes, sir. I'm also faculty.
Oh, nice,
Yes.
sir. Nice, sir. Thank you very much, sir. I'm lately welcoming you, and actually, my plan was join to first day session. First day session, some of the another program immediately it's have that. Due to that lack of time, I'm unable to spend some time with you. Definitely, our journey is with you, sir, in future also. Great, sir.
Our students are asking, can you conduct an income tax webinar with you? Definitely. If the sir give permission, definitely we will do. Thank you, Narendra Garu, for sharing your valuable thoughts and encouraging thoughts to our students. Thank you so much. And sir, with this, today's session is concluded. Okay.
Thank you so much. Thank you, sir. Thank you.
Thank you, sir. Thank you.
Thank you very much, sir.
Students, stay home and stay safe. Take care of your family members, and don't come outside. It is the corona was gone away. Don't thought like that, and sit in home. And whatever the necessity is required, otherwise don't come outside the premises of your home. And your examinations already scheduled. I hope our chairman was shared that information. And examinations is going to be starting on July 5th. Okay, the date shall not be changed, and once institute decided that. And please prepare well. This GST also, it may be helpful to your practical. It is a practical analytical way. It will be helpful to your examinations also. Okay, and friends, I think madam also shared that information. Our YouTube channel is having more than 20,000 students members there, and please be part of that. And whatever the programs or branch conducted, it will be available in that. You can repeat you view and learn the knowledge and improve yourself. And thank you. Take care. Good night.
Thank you so much.
Thank you so
Take
much.
care. Thank you.